Hello everyone, welcome to the daily market updates video where I try to share my knowledge, my insights and my view going forward. So today the theme of the day is, are we still in the Christmas rally? So we try to answer these questions in this video. So without further ado, let's jump on right into the analysis. Starting with the weekly time frame. In the weekly time frame, I wanted to discuss this very tight range that we are going through since last almost 3 weeks. So let me show you what do I mean over here. So when we go to the weekly charts, that is this one, basically we are just getting rejected from the top of the range, that is the top of the Bollinger Band, and we are taking the support at the 5-day weekly moving average, that is the blue line. So this is the tight range that we are in since last 3 weeks. So what is my view going forward? My view going forward is the resistance still remains the top of the Bollinger Band, that is this one, and still the support, that is the immediate support, still sits at the 5-day moving average, that is this blue line. So until we break out of this tight range, we cannot be sure. One only key observation that I wanted to share is this is probably 1, 2, 3, 4, 5, 6th consecutive week if we close in green. So normally, these kind of things doesn't happen. It's very, very rare. So let's see, we still have one day and we still have a very important news event tomorrow, that is the non-farm payrolls report. So let's see how we close the week. But again, as I said, keep a close eye on these levels to make sure that what can be the potential scope of the move tomorrow. So that's my take on the weekly time frame. Now let's jump on to the daily time frame. In the daily time frame, I wanted to highlight these 3 important points. That is, finally we are closing above the Monday's range, and right now we also are closing above the anchored VWAP. So let me show you all this in the chart, right? So this is the daily chart. So in this daily chart, this particular day was very, very important as far as price action is concerned. And let me show you why. The reason is, today was the day where we reclaimed the anchored VWAP, that is the white line that you see over here. We also reclaimed the 13-day moving average, that is the green line that you see over here. And finally, we also reclaimed the 5-day moving average that you see over here in blue. So reclaiming all these important levels is one important thing that got developed today. Other important thing that got developed today is we tested the Monday's high. So if you see the Monday's session, yesterday I told you that if we want to go higher, then we have to close above this Monday's range. And if we are able to close above this Monday's range, then we can expect a positive action. So now, since we are above the 5-day moving average, the shortest term sentiment is positive. Also, we also reclaimed, a lot of, median line of the Bollinger Band. So that is also positive. So what is my view going forward? Since we are approaching the end of the week, we have a very, very important news tomorrow, that is non-farm payrolls, and that is going to get released pre-market session before the regular session opens. So expect a lot of volatility tomorrow, both on the downside and on the upside. So tomorrow, let's say if non-farm payrolls comes in positive, and if market are perceiving that news as a positive event, then there is a lot of scope of testing the highs of from the last week. So as you can see over here, my assumption or my analysis tells me that if the market will go higher, then we are very nicely positioned to test the top of the range. And if, let's say, the non-farm payrolls news is perceived negative in the markets, then the immediate support is going to be the red line that you see over here, that is the 26-day EMA. So be very, very prepared tomorrow to have a violent swing both on the upside and on the downside. So what I would recommend is do not trade until these news events have been released. So as of now, looking at the price action and getting the confirmation from the indicators, it looks like we are back in the range, that is this chop zone, and it looks like the market is very, very resilient. Many of the people are waiting for a pullback and correction, but the price action and the technical analysis is saying otherwise. So I would definitely trust the price action and the technical analysis, and I would not fight the markets. Do not make that mistake of outsmarting the price action. Price action is price action, and you are supposed to respond. So my take on the daily chart is still bullish. We have reclaimed a lot of important levels today. And one also housekeeping things that I wanted to discuss is for those of you who are actively trading the Nasdaq futures, tomorrow is a very important day, because tomorrow the December contracts are getting expired. So please make a note of these, because December contracts starting from tomorrow, there will be a very, very less volume, and also they are going to get expired tomorrow. So I would suggest there will be a lot of low liquidity zones tomorrow. So the symbol is NQZ, that is the December contract. I would highly recommend to trade the March contract, that is the NQH over here. So you can see over here from next week, the March contracts are going to get traded. Now, one quick knowledge that I wanted to share regarding the contract switching is the reason why, one of the reasons why the markets is not going down is because a lot of hedge funds and money managers and big players from Wall Street, whoever has long-term positions on the futures contract, so they are supposed to roll over the contracts. So tomorrow and in the coming 2-3 days, that is Monday, Tuesday, Wednesday next week, all of them are selling this contract and will buy the next contract. So that buying will resist the sellers out there, because it is very hard when somebody with huge volume buying the next contract to carry forward the position. So in those kind of environment, a lot of sellers will be absorbed very nicely. So the probability of market going down from these forces in action seems to be very, very low. So I would suggest that be extra cautious on these days, because the contract switching is happening, and on top of it, the underlying dynamics suggest that there won't be a very big fall until and unless tomorrow we get a very unexpected data from the non-farms payroll. So be very, very cautious and be mindful of all these underlying tectonic shifts that are happening in the market. So that's about the contract switching, and that's my take on daily charts. We have reclaimed a lot of important levels, so we are still bullish, and we'll see if tomorrow's data can propel the markets upwards. If it propels the market upwards, then my target would, the next resistance would be this, that is the top of the Bollinger Band. And let's say if the markets roll over, and let's say markets perceive the non-farm payrolls news as negative, then the first strong line of support is going to be this 26-day moving average, that is the red line that you see over here. So be prepared for both sides and make an informed decision. And these are my learnings and my take on daily chart and daily time frame. Now let's go to the intraday time frame. Today's intraday time frame was very, very nerve-wracking for me, and let me tell you why. So my system did not give me a good buy and sell call, and that's why I had to be really, really patient and not trade. So let me show you what I mean over here by going to the intraday charts. So this is basically the 5-minute chart, that is the intraday chart that I use. So in this intraday chart, you can see that the opening was very, very strong. But as you know, like I don't trade, the first 30 to 45 minutes normally. So I waited, for the 7 o'clock, and I waited for, 45 minutes to see what is happening. So the first thing that you can observe over here is it rejected at R1 level. But normally I don't trade, in the opening range. So I just wanted to wait and see how the prices are reacting and are they able to sustain at these levels. So I waited, and then at 7 o'clock, after 7 o'clock, we actually had a very nice green candle, negating all the losses that were made in the first half of the session, at least first half an hour. So the next question going forward was how high it can go. So I was taking the daily chart as my reference to see like what can I do, because I was not getting a bullish crossover, neither I was getting a bearish crossover. So I was actually, the rules of my system did not allow me to actually take a trade. So I was just waiting, and believe me, it was nerve-wracking, but this is how you evolve yourself as a trader. This is how you stay in discipline, and this is how you follow your rules so that your edge can be defined. And so basically I just waited, and once we reclaimed the R1 level, I was thinking, okay, now what can we do, like can we go higher? So I was taking the daily chart as my reference. So my agenda was, if we can close above the anchored VWAP level, and if we can close above the 5-day moving average, then there is no point in going to short, because there is no nearby resistance in the daily chart. But as you can see over here, we just kept on chopping around, and we tried to have a bearish crossover. So I waited for that crossover, and I never got a confirmation. So that is why I never took the trade. So now after 8:30, I was like, how can I benefit from this price action? So I waited for the level from the daily chart, that is the top of the range, that is this one. So it was around 16,030. So the 16,030 level, it got reclaimed and it was charging higher. So I was of the opinion that let's just not trade. So after the psychological level of 16,050 got breached, I was like, I should take a short. So what happened is I took a very 1/5 of my position, like I took a 1/5 of my position short, that is just 2 contracts, and that too on my evaluation account from the prop firm. Because the reason why I do this is, if you are not getting a clear signal from the system, then do not trade with the original position size. So that is exactly what I did. And as you can see over here, the entire session, it was so choppy because we already had a tremendous gain. So this was the day wherein my system compelled me to not trade. But to be honest, there were no major indications from the technical side of analysis that okay, I should take a trade. As you can see over here, we reclaimed the R1 level, and after that we were just chopping around the R1 and R2. And also, if you look at the EMAs, that is the exponential moving averages, even that didn't give us the confirmation like bullish crossover or bearish crossover. We did not have any crossover. This crossover that you see over here was a very marginal crossover, and that too at the end of the session. So normally I don't trust at the end of the session. So today was a very light day for me. Why? Because I just traded 1/5 of my position size, that is 2 contracts, and I also like did not trade much. But the good part about not trading and following your rules is, this is what makes you a good trader. So there will be days wherein you will be compelled by your rules to not trade, but believe me, those are the days that will make you a good trader. So this is my analysis, and this is my real history of today. So this is my take on the intraday time frame. No major market moving news was happening today. I thought the used car prices and the jobless claims in the pre-market would move the markets, but it was perceived very positively. And yeah, it was a very quiet session for the day for me personally. But the important thing is, we got a really big moment and we really reclaimed a lot of levels. So that's the important thing. So there will be some days which are low premium days, wherein the moves will be done in the pre-market, and the risk reward was not in my favor, so I did not trade. So these are my learnings from the intraday today. So let me go into the macroeconomic section and discuss few important things. So as you can see over here in the economic calendar, tomorrow is the non-farms payroll, and in this this is very this data is released every month, the first Friday of every month. And normally what happens is this is a triple volatility, that is the triple very highly volatile data that comes out, and this is going to get released pre-market. So be very aware of it. Michigan consumer sentiment is also going to get released tomorrow, so that is going to be crucial as well. So my suggestion or my game plan going into tomorrow is I would be trading after 7. That is after 7 means the Pacific time, after 30 minutes of the regular open. So that's my game plan for tomorrow. Pay a very close attention to the hourly time frame levels, that is the hourly pivot levels. Be prepared for both the long and the short side, because nobody knows what will be the reaction of the markets to this news event data that's going to get released. So that's my take on the macroeconomic section, and that's my learning from intraday. So lastly, I would like to thank you, all of you, for viewing this video. And please feel free to like, share, and subscribe this video if you find value in the content. So normally I try to give the most unbiased opinion on the markets and my analysis. So please feel free to tune in, and feel free to like, share, and subscribe. Thank you so much, and I'll see you next time.